welcome to our next segment of Ask Janae. We're so happy you could be joining us. Today we're going to be discussing LLCs versus S Corps. We're just going to give it a few minutes and let some others get online and give me a minute to figure out what the heck I'm doing here. Anyway, so yes, welcome to Ask Janae, and I have my assistant in here as well, Lars, and she's going to help us out with the slides. And if you have any questions, make sure you go ahead and drop those questions into the chat, and she will make sure that I get the questions so we can get those answered for you. So yes, every week on Mondays at 11 a.m. we do tax topics, anything taxes. You ever wonder why all these billion-dollar companies, they don't pay anything in taxes, or barely anything in taxes? Meanwhile, us regular folks, we end up paying much more in taxes. And so this show is just to educate taxpayers and help them so they know a little bit more of how they can take advantage of certain tax deductions. So we would like to ask you to go ahead and like and subscribe to our social media channels. We got Altera Tax Relief on Instagram, our Facebook, Altera Business Solutions, and also on YouTube. Feel free to go back there and see if there's any tax topics you may have missed and you'd like to view. And if you don't find those tax topics in there and there's something that you'd really like to know more about, please go ahead and let us know, and we will put together a presentation for you on those particular tax topics. So, well, very good. So let's get started and talk a little bit about LLCs and S Corps. I'm going to go ahead and, all right, so just a little bit about me. My business is Altera Business Solutions. I've been an accountant for over 40 years. Altera Business Solutions has been in business since 2003, and we specialize in software implementation, managerial accounting, as well as tax advisory, and tax representation. Like I said, we've been in business for over 20 years. And, you know, I guess I can't really think of doing anything else. So since I've been in this for so long, I've just decided at this point, I want to go ahead and help out others and educate them and put together these presentations free of charge, just so I can give back, because I've been blessed throughout my career. So anyway, so today's topic is LLCs and S Corps, and it's one of the most requested tax topics because it seems so very popular that everybody who wants to start a new business, they think they need an LLC or they think they need an S Corp, and they really don't know what it is they need, but they're going to go ahead and ask their buddy because their buddy has an LLC, and then when they get their tax bill, they're like, oh my gosh, you know, how come my taxes are so much higher, or this or that. So anyway, again, we're going to go ahead and educate you on the differences and, you know, the differences and how one may benefit the other for you in your particular stage of your business. Okay. So we're going to, so basically, LLCs and S Corps are typically for those people that are managing or working within their business. So, so if you're a managing member, or if you're, you know, so basically you're a solopreneur, you might have a couple of partners, but this is usually a closely held entity, and you usually are working for that entity. So you would be then compensated for your work in one way or another, depending on what type you go. And we'll explain as we go further. Okay, so there's one question every new entrepreneur needs to answer when they start their business. How will that business be structured? And again, this is one of the biggest questions that were asked. And so that's why the presentation. I've done this presentation a couple of times now. So anyway, not this particular one, but different ones on the same particular topic, because, you know, people need to know this, or they need to know me at least, so I can help them. Okay, so here's a little bit of, here's our index, our table of contents of what we're going to be discussing today. The benefits of LLCs, the drawbacks, benefits of S Corps, and so forth. So, and Okay, so what exactly is a limited liability company? So a limited liability company is actually an entity, and it's a business structure. It's an entity. It gives you liability protection. So if someone sue you, your personal assets would be protected. So if you guys decided that you wanted to go ahead and maybe go into business with a partner or so forth, then you could go ahead and um, create an LLC. Okay, so LLCs are the most commonly structured for the small to mid-sized businesses. So LLCs, however, the difference is they can be taxed a number of different ways. And this is because an LLC is a limited liability company, but that doesn't tell you how it's taxed. So typically you have the single member LLC, which would be just a solopreneur. And that means that it would just go on your Schedule C and flow through to your personal tax return. You could have a multi-member LLC that would have multiple partners. You can also be taxed as a C Corp, or you could be, which is a 21% tax rate. There are benefits for certain companies to be taxed as C Corps, especially if you have larger healthcare plans for your employees and so forth. There could be benefits of C Corp, and additional pass-through entities like S Corps. Okay, so a pass-through entity, it doesn't actually pay the taxes for the entity. So basically what that means is a pass-through is that it is passed through to your personal income tax return, and therefore all of the income then is reported on your personal income return, and then you can go ahead and put in your deductions for your personal deductions. Okay. The benefits of an LLC, well, owners are not liable for companies' debts or liabilities. So if you were to go under, they will not be able to go after your personal assets. Okay. Owners can choose how they want to be taxed, whether they want to be taxed as a sole proprietor, a C corporation, or an S corporation, depending on, again, where you are in your business. LLCs generally are easier to establish. I mean, everybody's doing them now. You can go online and pretty much do them through Rocket Lawyer or whatever, or you could call us and I could set one up for you as well. But LLCs are member managed or manager managed. And so if you're startup and you're hands-on owners like most of us, we would be a member managed setup LLC. Now, what are the drawbacks? Well, the drawbacks are you're basically all your income, or all your profit, I should say, from your company is going to flow through onto your personal income tax return if it's just structured as a single member LLC. So therefore, you would be paying self-employment tax on all of that profit. So that could be significantly higher taxation for the entity paying that additional self-employment tax. So you might want to opt for an S corporation, and that's taxed a little differently, and we'll talk about that as we get into S corporations. Now, LLCs cannot issue stock, so that's another drawback. So if you're looking for investors to invest in your company or something, an LLC would not be the preferable way to go, since you don't actually issue stock. And establishing an LLC in a state that you do not live, well, basically that doesn't do you any good, because you still have to register that LLC in the state that you are doing business in as a foreign agent of that state, or a foreign LLC. So now, what is an S Corp? Well, an S Corp is subchapter S Corporation, and it's a classification for the Internal Revenue Service that legally permits certain corporations to pass through corporate income to their personal tax returns or to the shareholders of that. Now, what is the benefit? That eliminates the double taxation. So you're not paying taxes on the actual corporation, and then also paying taxes as the individual on that income. So an S Corp would eliminate that double taxation. Now, there are certain Okay, basically to start an S corp, it's not a very complicated process. You need to file a form 2553 with the IRS and do an S corp election. Okay, so but there are certain limitations on S corps. For example, an S corporation are limited to 100 shareholders. They must be domestic corporation organized under the laws of the state and the territory of the United States. So no foreign entities. Only certain people, trusts, and estates can be owners. No partnerships, no corporations, or no non-resident alien shareholders with an S corp. Owners are not eligible to participate in cafeteria plans. And an S corporation can have only one class of stock. So now the benefits of the S corporation is much like you have the protections of having a corporation, so you're not liable. S corporations are not subject to corporate income tax. Instead, income and deductions and credits are passed through to the shareholders, and they report these on their personal returns. Shareholders can be treated as employees, potentially reducing self-employment taxes compared to the LLC. So basically, if you're paying yourself because you're an S corp, you actually are required to take a payroll, and if you're paying yourself, you pay payroll taxes on your W-2 income that you're being paid from your S corp. But any of the other profits or any monies that you take from your S corp through distributions are not taxed for self-employment taxes. So there could be a really great benefit for those that have a lot of profit that are being passed through to your personal tax returns. Okay, so the drawbacks of the S corp is that it's limited to 100 shareholders, and they must be U.S. citizens, or they must be residents or U.S. Legal residents of the United States. S corps cannot be owned by other corporations and partnerships. S corporations must follow more formalities compared to the LLC. You need to have your regular shareholder meetings and board meetings, maintain minutes, and offering additional record keeping requirements, like you're required to take a payroll, so it's going to be additional administrative costs. It's going to also be a little bit more money to file your taxes because you're going to have a corporate return and an individual return. And S corps are required to allocate profits and losses to shareholders in proportion to their ownership interest. So unlike a partnership, you distribute the profit to the shareholders based on their percentage of ownership. This really, with partnerships, you can actually distribute income differently. So if you want to, in that case, you might consider a partnership agreement. Okay, so here's the key differences. Lars made this great chart. It's actually in our August newsletter, which is going out. We're a few days late, but we had some technical difficulties. But anyway, this great chart. And we are going through this presentation, if you find it's a lot of information and you want access to the slides, Lars will go ahead and give you access to those slides. So just go ahead and drop her a note in the chat, and let us know if you have any other questions so far. Okay, so formation, an LLC formation, if you want to go ahead and form it, you just go to your Secretary of State and you file your articles of incorporation and with the Secretary of State to form your LLC. And then if you need to get a business license, you'd be required, depending on your city, you could get a business license. S corps are also required to file the form 2553. So if you go ahead and create an LLC and would like to be taxed as an S corp, you just file along that form 2553. Okay, and along with filing the form, there are two separate processes for forming the LLC versus the S corps. So the following steps are required to start a business as an LLC, and basically it's listed here what you need to do to go ahead and register with the Secretary of State. Okay, so the final step then is to determine how you would like to be taxed. And if you want to be taxed as an S corp or C corp or whatever, you file that as an S corp. You'd file that form 2553, and then as long as you meet the requirements of an S corp, you should get approval quite they're about a few weeks out, and you get approval for your S corporation to be taxed as an S corp. Okay, so again, this is one of the downsides, and this is where it really kind of takes a lot of discipline, because when you're going as a solopreneur or whatever, and you're like, oh wow, I have to take a payroll, and it's a big chunk, but it really, really reduces your taxation at the end. Once it flows through on your self-employment taxes. And not only that, it does other things too. It reduces your income, that makes you then qualify for certain other tax deductions, because you can keep your income below certain levels, even though because you're deducting your payroll. And you're taking a payroll, and then you're deducting that payroll, so less is going to flow through to your personal tax return. And so that's really the benefit, and it's a huge benefit. But at the same time, you really need to be disciplined to take that regular payroll. So make sure that when you determine what your payroll is going to be, that you do something that's reasonable, that that you're going to be able to do every month or every other week, depending on how you want to do payroll. I have some clients that do one maybe once a year. It's not recommended to do that. Because you don't ever always know how much money you're going to have at the end of the year. So, I'm always a critic, basically, to pay yourself first, and that includes payroll. So you go ahead and do your payroll, and then you set up your retirement plans, and then so that you're paying yourself, and you're also reducing your taxes by paying yourself first, which is really cool, right? That's the way to do it. So taxation, basically, I think we discussed there most of this. But here, okay, so let's kind of just review the slides here. There are major differences in taxation between the LLC, which we've just discussed. Either way, the business profits are taxed through to the owner instead of paying corporate taxes. The owner pays income tax as well as self-employment tax, depending on your payroll, okay, which covers Social Security, Medicare. Now, the self-employment tax is 15.3%, and that's a pretty high rate, right? Because you're paying self-employment tax. You're not paying your Social Security, Medicare like an employee, where your employer matches. So you have to pay the entire amount. Okay, so choosing to be taxed as an S corp will reduce that self-employment tax, because you're taking the payroll then, right? And then you have your company that's paying the employer portion of your taxes, and then you're only subject to your employee portion of your Medicare and Social Security taxes. Okay. And management structure. Remember, LLC has no limit on the number of members. It's got flexible ownership structures, so you can have it taxed at different types of entities. The S corp has a maximum of 100 members, and you must have a board of directors, and that's basically for any corporation or S corps or any professional corporation. You would be required to have a board of directors. And another difference between an LLC is ownership structures. There's no limit to the members. This may not be an issue for solopreneurs and small business owners, but should keep in mind if you intend to scale your business. And let's say if you wanted to bring on other partners, or if you wanted to convert to a corporation where you're going to go ahead and distribute stock, you're going to be looking for investors. So you might consider restructuring at that time if you need to. Okay, so LLCs, basically a simple setup. S corps, you need to set up your corporate bylaws, your annual shareholder and board of directors meeting. Okay, again, it's simple to start your LLC, and the similarities, basically, they both Well, okay, so they both protect your personal assets, pass through taxation. Both types of corporations get pass through taxation by default. LLCs are taxed differently because why? Because they're taxed, we have to pay that self employment tax on all your profits. Okay, formation and maintenance, while requirements are offered by the states, both S Corps and LLCs file the articles of a corporation and pay the filing fee. In the state of California, it's $800 annual filing fee. So that isn't on top of it. So that's another thing to keep in mind. So if you are a Schedule C or a single member LLC, even though all the income flows through on your individual tax return, you're still going to get a tax bill from the state for the LLC, which is your $800 plus whatever tax for your LLC. So keep that in mind. It's an additional tax of what you would be paying on a typical Schedule C. So some people who don't, aren't familiar with LLC, I need an LLC, and then they file their tax return. It's like, why do I have to pay this extra $800, for my company? So to have, but it's for protection. So you need to take, protection of your assets. And if you have assets that you need to protect, it's a no-brainer. You need to have an LLC. And depending on how much profit you have, determine what type or how you would like to be taxed for that entity. Okay. So again, this is basically another review of the LLC versus S Corp and choosing your best options. Again, it's kind of a complicated process, but it's not too terribly processed. There's just rules, and you got to follow the rules. So again, if you want to go ahead and set up a new company, or you're just maybe a Schedule C and you need to set up an LLC, the differences, and you can make more of an educated decision of what or how you would like to be taxed for that limited liability company. Okay. So how are we doing, Lawrence? We doing okay? Does anybody have any questions? I have no idea. All right. So if you decide that you need additional help with any of this, of course, feel free to give us a call. We've done plenty, and it's really something that you should have. You should be educated. I mean, as well as, having a tax advisor and stuff, and, someone such as us that can help you and advise you on the best ways to reduce your tax liability. We also have the ability, to advise you, do bookkeeping services, prepare those returns for you, and, help you monitor your finances and work with your financial planners, because I can't even tell you how important it is that you have a financial planner, because a financial planner is going to help you build wealth. Why someone like me is going to help you pay as little in taxes as possible. So, and we all know that the largest bill in our lives is taxes. Okay, it's not your home, it's not your kids, it's taxes. That's what you're going to be paying the most in your life. So, it's important that you try and pay as little taxes as possible, as legally as possible, and also work with a financial planner to build wealth, and so we can save for our futures and save for our future generations. Okay. So, okay. So here, Lars put some questions. Which is better, S Corp or LLC? And it just depends on your specific needs. Why choose an S Corp over an LLC? Because you have too much profit, and you want to go ahead and not pay all that self-employment tax on all that profit. So that 15.3%, you would rather go ahead and take a payroll, pay yourself, 80,000 or whatever your payroll is, and pay your Social Security and Medicare on that payroll, and limit and which can then all be deducted from the company. And so the profit that's being actually transferred over to your individual return is much less, because you're taking that payroll. And again, as we say, that go ahead and paying into your retirement plans, that's also going to reduce that profit that transfers over. So that's another advantage of having an S Corp or an LLC. Okay, so, or an S Corp, I'm sorry. All right. Is an S Corp better than a single member LLC? Well, it depends on where you're at. It's S Corp is not for everybody, right? Because someone who is just starting out, they may not have a whole lot of profit. And so it doesn't really matter. Or maybe you're actually a company that has a cost of goods, that you're selling a product. And if you're selling a product, you're going to have costs that's going to reduce. So that's going to be probably your biggest expense. So it's going to reduce your profits as well. So you might not necessarily need to organize as an S Corp. Eventually, if you carry a large inventory, you probably end up setting up as a C Corp, but then that's a discussion for another day. So what does it say? Whether an S Corp is better or than a single member LLC depends on the owner's goals and requirements. An S Corp can offer tax advantages, lower self-employment taxes, but a single member LLC is much easier to manage and greater flexibility on how you distribute your profit. Remember, S Corp, it has to be distributed based on the shareholders' percentage, and in an LLC, that is not the case. Okay. Yes. Can an LLC become an S Corp? Yes, that's what we said. And to do that, you would file your Form 2553, which is an sub S Corp election form. And you basically choose to have your LLC taxed as an S Corporation. Now, how do states' rules vary from LLC to S Corps? Well, that depends on your state. And like I said, California is $800. There are certain other states that don't have any tax requirements. They do require that you register your corporation with the state, but they don't have any taxes. So there's different. But again, if you're actually working in your business, conducting business in California, and you structure, let's say, a Delaware corporation, Nevada corporation, well, for the income that you make in California, you basically have to set up as a foreign entity doing business in California. So even though you're in another state, but so you'd still have to pay California state taxes if you are conducting business in California. So make sure if you think you're gonna, go to a state that you're not gonna have to pay as much tax, make sure you talk to a tax advisor or someone before you do that, because it may not always be in your best interest. Okay. So what are the tax benefits of an S Corp versus LLC? One of the main tax benefits of an S Corp is self-employment tax savings. S Corp shareholders can work for the company and receive salaries, which incur payroll taxes. All profits of the LLC, they're basically deducted from the company, and then all profits that flow through to the individual tax return, those aren't subject to self-employment taxes, and and you can also take all of any distributions above your payroll and not pay any self-employment taxes. So that is a good way to go once your business becomes very profitable. All right. So again, I want to thank you for taking the time with me and learning about LLCs and S Corps. If you have any further questions, you have any suggestions for future presentations, we would love to hear from you. If you have, and make sure, if you would please, we're really trying to build up our following on the different social media platforms. Altera Tax Relief and on Instagram. We got Altera Business Solutions on YouTube, and then on Altera Business Solutions on the Facebook. And any of these live streams are available to go back and review. And if you would like slides for any of the presentations, feel free to reach out to us and talk to Lars, and she will make sure you get one. And also check out our website. And if you're interested, check out